Hi, Warriors. Alexander, how you doing? Louise, welcome to F.A.C.E. Greg Herbert, welcome to F.A.C.E. Hello, Bran, how are you? Sinatra. Jamie, welcome to F.A.C.E. Hi, Richard. Ryan, AJ, everybody. Team, how's it going?
Coach,
how are you guys?
I think Ryan and I just said that in unison.
Yeah,
It was
like twins.
I heard the harmony.
Yeah.
Okay, very good job. So, I want to start here, guys. Just when people have embraced higher for longer, yields, they look like they've peaked. You look at the weekly and, we're back inside of K-Man's line. Was a throw over. And unless this is a break to buy, looks like, I don't think that we should have done this.
That double top is about done.
Is it? Okay.
Yeah. I mean, we're literally within a couple of ticks from completing that double top right there. So
all right, but Blake, TLT is going to come in at 88.02. Yeah. And I was hoping for one more drive down. I hope you're right. The double top's complete on the 10-year yield and we rally one more time because all year people were saying don't be short because of all the huge positioning on the short side, and the shorts just cleaned up and people are still that way. You can't be long this stuff because of it's going down, but I think that we could be near an important turning point. Maybe we did it. So we'll see what happens. Obviously, the yen isn't following yields. I mean, we're moving sideways, but the yen looks like, this descending triangle. I'd actually like to see one more high into next week in the yen. But anyway, so Blake, you want to start off and with that we're completing something there on that double top and show people?
Yeah, I can do that. And good morning Ryan,
buddy.
How's it without K-Man? I know he's traveling for the next couple of days. You had the show, the flow show all to yourself today. How'd that go?
Yeah, it picks his moments, leaves me when it's nice and quiet to go over stuff. But all good.
They're like Martin and Lewis,
Nolan Hardy.
I know that's yeah, you guys are a great dude, like Johnny Carson and Ed McMahon, all these people that you guys are all too young to remember.
I remember them. Them.
Yeah.
All right.
Now, I may have been a youngster, but I remember. Yeah. So Ryan, so what are your thoughts here? I mean, yields have come off, but stocks have rallied pretty substantially. And they've come back. What's that, Dale?
Oi.
Yeah.
The strength of this recovery surprised me. Okay, you have the same. Yeah, we're approaching 61.8 here, Blake.
Yeah, getting close to the 618. It's probably stunned a lot of shorts, a lot of people that are expecting, the head and shoulder breakdown to really continue. But we knew that 4,200 was a big deal. I mean, on multiple, we've beat that dead horse plenty. But we've seen a hell of a recovery in equities, close to a 618. You take the longer term move, we're above a 38% retracement, closer to a 50%. But yields have come off, they've corrected. Ryan, what are you thinking here? I mean, is this it for stocks? I mean, do they roll over? There's something from Goldman Sachs saying that their CTAs are looking to buy every day or something like that. But go ahead.
Yeah, because they're net short, huge. Like, so that may be why they're doing it. I saw a chart. CTAs are still net short the market. Big.
Yeah.
Yeah. So Ryan, what did you read out there?
Well, we were looking into the bond moves this morning because it broke. US 10s back below 470, a bit of a line there as well. And, we spoke about this since the FOMC when, the market all of a sudden believed in higher for longer, which is what that last acceleration up to those highs were. Now, when you've got the, flows going into that trade, when it stops, you need to have support behind it. And there was no support behind it because the price has just collapsed from it. It's almost similar to oil.
Right. Ryan, you said that during the NFP, when we were signing off, you said, I'm paying attention to see if the 10-year could make a new high or not. So your trader intuition already told you something up there.
Yeah,
great call.
It nicked it by a couple of pips, but that might have just been spreads or whatever. But it held, and that's your clue. It's your clue to say, okay, well, the market's done as much as it needs to do as far as the higher for longer trade goes. So what's next? So what's next now is that everyone's saying, right, well, that trade's over. So you've suddenly lost your offer in the price because no one's selling it anymore. So now you get a switch. So that lot's finished. Who's coming in next? Well, maybe people coming next thinking 10-year yields up near 480, near 5% again. Well, that's tasty for some investors to put money in, cash in, park the money in, because if rates are coming down from this point, then you're going to lock in some yield up there. So you've got those bunch coming in and saying, we've seen them before. We saw them coming in as yield rallied previously. So, as one lot finished doing their thing, another lot step in. So that's where we're at with yields. Probably we find it gets a bit more balanced now. Maybe we draw a bit of a line, 4.4, 4.5, and then, we go sideways for a bit until we get the data. And it's really going to be the data that's going to kick yields back up. We really have to see some real strong data to get us breaking these highs in yields, I think, for now. And if we don't, then the market's going to be right, higher for longer, fine. We're just going to mooch between 4.9 and 4.4 or something for a while. But the bond move has been across the board. I mean, Bunds this morning, there was apparently a big buy order go through. It triggered a load of buy stops. So you've seen, bond yields rallying as well.
We are right back. We're right back up to previous support too.
Exactly.
So, yeah.
And how does that translate into FX? Well, you've got dollar weakness on the back of US yields falling. You've got euro weakness on the back of bond yields falling. And what does that do for FX? Unfortunately, it gives it zaps the volatility out of it because no one's buying the euro on the weaker US side, and no one's selling it on the weaker Eurozone bond yield over there. So, euro dollar's doing absolutely nothing. It can't decide whether it wants to take off or drop down. PPI today, hopefully, will be the kicker. If we get a nice outsized move in the numbers there, we're going to go one way or another, and that may be the decider for this 106 level in euro dollar if it's a soft number. But I favour right now. I favour selling the dollar on rallies rather than buying it on dips. So I'm going to be looking for a hot number to fade.
So you might and you might get that today. I mean, we got PPI today. We got CPI tomorrow. Now, here's another thing. We've heard, and over the last 24 hours, we've heard from how many Fed speakers have we heard from in the last 24 hours?
Too many.
There's a
Shut up, right? Shut up, guys.
I mean, no, seriously, but these Fed governors are really freaking hawkish. I mean, dovish. Like they're like really like, hey, we're done. I mean, the market, we're done raising rates. I don't know, and I'm gonna say this without seeing the data, obviously, because we haven't seen it. We haven't seen producer prices. We haven't seen CPI. But knowing what type of what could really be viewed as an inflationary type of environment, we have this Middle East conflict that is and I can't stop watching the news. I'm sorry. I spend like literally 2 hours at night, like just watching news and seeing all the coverage, and it just makes my blood boil. Anyway, I sit here and look at what's happening around the world and can't, for the life of me, figure this is going to be deflationary when it comes to, energy costs and whatnot. But, what does the Fed chairman get ahead of this? And, I don't think he's speaking the rest of this week. I've got to take a look. I think he is not, but we have.
I'm not sure. I don't think
the market is whistling
week.
When it comes to risk, Blake. I think the market is whistling past the graveyard, which means when you walk past a graveyard, you're whistling because you're young, you're immortal. Nothing can touch you. And that's the way the markets are acting right now. That's a big story, how great risk has acted on a strong NFP and in the middle of a breakout of war in the Middle East.
Right. Yes, I hear all that. And then, but the point I was trying to make is we have all these Fed, over the last 24 hours, we've had a lot of Fed officials come out, Fed governors talking about how, hey, maybe we're done raising rates here. And the market's been, trading off of that. We've seen this hell of a recovery in the S&P and in equities around, globally. I don't have to say just the S&P. But you can see that, we've rallied back to about 4,000. You've got like the DAX that's pushing right up against it's into its resistance zone. You see, even the Nikkei has recovered, right? After probing below the 31,000 level, which was a really, really big level. We probed below it and we popped back up again. So we've seen global markets kind of stabilize, thinking that, peak rates are in, or, the terminal rate's done. Now we got to figure out when we're going to start cutting rates. But when are we going to get pushback from the Fed chair? And I know he does. I was just looking through the calendar. I don't think he's speaking for the rest of the week. But look, if we have hot inflation data today, like PPI, because remember, the PPI data is on the producer level, which trickles down to the consumer. So then we're going to have CPI tomorrow. If those both data points come in a little hotter than expected, Ryan, I mean, do you really want to fade the dollar? You're facing with all the shit that's going on in the Middle East and in Ukraine and, in China. I mean, that's pretty ballsy if you ask me. And I'm playing devil's advocate over here against what your idea is. So, and I look at the dollar index and I see it flirting with support. I see it. I know.
We talked about 104 last week, Blake.
Yeah, it's 103.88, which was the big breakout point here, give or take a little bit. And even yesterday, when we went through the morning edge, I'm like, our support is not 103. I'm sorry, I said 105.88. I said 103.88. It's early in the morning for us. Okay. I'm at 105.88, and I said, support's not 105.88. It's 105.68. This was written yesterday, right? 105.68, because I'm really just focused on this spike low over here, because I'm like, they're gonna stop out all the people that are long dollars right here, because it's easy. Like, that's easy. I'm going to stop you all out right now. Now we're really flirting with this support. So I'm not ready to call that the dollar is done here, Ryan. But anyway, let's get you guys' thoughts here. Ryan, what do you think about that? With the Fed and terminal rates and, blah, blah, blah.
If we get a higher CPI on both counts, that's 3 reports, then now that's beginning a bit to become a trend, and that'll get the market hawkish over a November hike, that last one in the pocket. But that may still be a bit of a dead cat bounce amid the year's trend that we've seen, well, longer than a year now, of falling inflation. But as far as the Fed speakers goes, you've got to listen to the nuances. And the latest nuance from all these guys, or a lot of these guys, is that the level of yields, of Treasury yields and rates, is now acting as potential tightening.
Yeah, it's tightening.
So that's their excuse to keep the rate hike in the back pocket. Now, obviously, the market can move. As far as me trading against the PPI or whatever, I'm not looking to build a position for the next 6 months. I'm just looking for a smash and grab. If I can get that today, great. If I get it tomorrow, fine. But this is a similar situation to when we were playing the rate hike cycle. You know, when the market was guessing, where's the top, where's the top, where's the top? Once it knows where the top is, the data has to do something extra to then build on that. So the market got to its hawkish level, peak hawkishness, and then it didn't matter what the data did. The dollar could go no higher and yield could go no higher. The only thing that kicked it higher was the market suddenly thinking, oh yeah, higher for longer is a real thing. Then that brought us the next wave. So now we're in a similar situation. What does it take to add on top of that wave? Well, you know, that's inflation going back to 7%, not jumping a couple of pips to, 2.5% to 4% or whatever.
Yeah.
So the data's got to turn really bad for the Fed to get on another hike run.
All right. I think there's one thing that could do it. We didn't put a carrier in the Mediterranean for nothing. Yeah. I think there's going to be punitive airstrikes with Israel and the U.S. flying the mission together. And then it's a wild card in the Strait of Hormuz.
Well, then it's World War III, Dale, and we're all gonna.
Well,
I hope the majority of you own AR-15s at that point.
All right, it's not World War III until we have it going in the Pacific theater. It's missing, so we'll have Europe, we'll have the Middle East, Asia's the next one. Then you could say we have World War III.
Oh, well, we've got
the US. We've got the US warning Iran. We've got the US warning Iran. We've got Israel warning Egypt. Look at the nat gas chart, okay? And you can look at the same for Dutch TTF and UK gas, okay? We've had that headline, Finland looking at sabotage of their gas line. Now, Italy is saying if Israel shut down supplies from Egypt, that affects Italy because that's where Italy's been getting a lot of its stocks from to build up for the winter. We're heading to the winter, and now gas prices are taking off, all in part to do with...
Oh, my God, I paid $6. I paid $6 yesterday.
Yeah.
Here in the U.S.
Yeah.
Europe, that's cheap, right? But here
it is. But
this is inflation. This is more inflation coming down the pipe, but it's geopolitically led. And I'm sorry, interest rates don't affect that.
Yeah, so going back to your
point,
the
Fed. What's going on is bigger than the Fed.
But going back to Ryan's point, we're going to have to see a real big tick up in inflation for the Fed to move, according to Ryan. But here's the other thing, Ryan. This is the other thing I want to say. The Fed might be content at letting higher rates do God's work from here, right? I'm going to leave rates here forever, and it's eventually going to squash inflation. But how about if it doesn't? And let's just talk for a few minutes and just say that 6 months from now we have CPIs running at about 4%, right? And the Fed hasn't done shit. What do you think is going to happen then?
Oh, well, that's 6 months down the line, and that's always been the risk. I've said it even through this whole inflation hike cycle. Inflation's going to fall back, but the problem's going to be where it settles. It's not going to go back to 0.1%. But in terms of talking about the dollar now and this data, if we get hot numbers, the Fed may still be, we're not going to raise anymore. We're happy to stay on pause, but that doesn't stop the market from pricing further hikes, and that's what we have to trade. We don't necessarily need to trade what the Fed is going to do. We need to trade what markets expect them to do, because that's going to send you highs. That's going to send the dollar higher. That's all I'm concerned about as a trader. How hawkish does the market get on this data? And if it can't take yields in tens through that high, well, then I'm going to trade it, because the price action tells me no matter how much hawkish the market's getting, it can't get through that level. And that's going to affect the euro and everything else.
Here's the setup for today, right? You're dealing with the euro. And by the way, I actually had a euro short on for the last, 36 hours or something, literally at 106, or no, it's 24 hours. I think I shorted it yesterday, right at 106, like literally right here. I shorted it right here at resistance, and I'm like, and it just didn't do anything. I was hoping we get a little bit of a ahead of the curve, you know what I mean? So I was thinking, oh, okay, I'll short here. I was short here, And by the way, if you guys, you know, in the chat room, you know, I just told everybody I just, you know, closed out of those positions. You can see it right here. Just took everything off, all the dollar positions. I, you know, just reporting back. This is what I was doing. You know, you got the euro here. I was hoping we would have, you know, been off a little bit, like trading down here ahead of the data. That just did not happen. So, but I think it sets us up really good for today, because we know, and I blogged about this yesterday, right? If you go to our website and just look at the blog, you know, it's just the daily chart of the day here. You know, I was warning people, like, don't get too bullish euro just yet. I mean, we're facing a lot of resistance, and you can see above 106.30 gets kind of bullish, but really it's above that descending channel comes in at 106.50. That's when we start getting pretty bullish in the euro. That's when you start looking at the euro for a recovery back to 108 or, you know, something like that. And then the flip side to that is we're in a downtrend, and the dollar is still in an uptrend, and you can't deny that, right? Yep. So, you know, we get below 105.80. I mean, I don't know if I'd want to be long euros anymore after this nice little flat recovery. So I think that's really the setup today. Now you can get a little bit more exotic, and you can throw some Aussies in there and say, well, I just want to short the Aussie because we're making lower highs, or I want to short the Kiwi.
That's a good reason.
It keeps rejecting resistance here. Or I want to buy the dollar CAD because the stupid thing finished its head and shoulder I said platter.
Lots of trades.
Whatever, you guys know what I'm talking about. Anyway, hey, a comment came in from Jamie. He says, treasury note and bond auctions today. I haven't been following the auctions, but domestic buyers are strong. Wouldn't that indicate a flight to safety? I think that, and I just want to mention this here. I mean, obviously oversupply has been the issue globally, you know, as governments have been just, you know, flooding the market with, you know, with you know, their bonds and treasuries. It's been driving yields higher. Like I said, it's not a US issue, it's a global issue. But when you start seeing investors going, hey, I'm finding value at these levels, and that's what is happening with, you know, our bond market. That's what's happening with, you know, other bonds. You can see it in the boons we just pointed out a little bit earlier. You can probably see them in gilts too. I haven't looked at those this morning, but you know, you're seeing buyers come in, and is that a reason to be risk averse? Yeah, I think if you look at the bond market, this is something we talked a lot about yesterday in our private shows. You know, you look at the bond market, you look at gold, and you start seeing the dollar buck the trend, and the dollar going higher even when yields are going down. You know, you're in a you're in an environment where people are starting to sniff out some you know, some risk aversion. So, you know, whenever you got gold, bonds, and dollars moving together, that's usually not a good mix for risk. But that hasn't stopped we haven't seen it, and the stock market is still pretty well bid here. Anyway, Ryan, what are you thinking today? I mean, we got just a few minutes. How are you going to trade the PPI today? Oh, Ryan? Did we lose Ryan? Did we lose Blake?
Hello.
No,
I'm here.
Oh, okay, there he is. All right, there he is.
No, as I said a few minutes ago, I'm more a rally seller than a dip buyer in the dollar. But just going back to that auction, we had the 3-year yesterday, which was demand-wise a bit soft, bid to cover 2.56 from 2.75. So there was a dip in demand. So it may be testing the patience, and they also wanted a bit of a premium on the rate as well. So, you know, maybe there are worries about how much debt the US is issuing, and their ability to pay it back is reflected in that higher rate. But yeah, it's for me. Yeah, I think the Fed is done unless, you know, the shit hits the fan with inflation again. Even if they hike another time, that's likely to be the final one and done. So yeah. While yields tends are holding below that double top, I'm happy to sell a rally.
And I was going to say, I heard this yesterday, and I didn't confirm. It was in the middle while I was doing analysis for the platform here. Expectations have gone down for November to like 16% or 15% or something close to that. Yeah, again, listening to all these Fed governors, it's like, okay, when's Powell going to come out and say, hey, don't get crazy here. I don't want you to, because if the market starts believing that the Fed's done, you can already see the implications of that right now, right? I mean, this is unwinding when you see equities, firm up again like this. This is unwinding their process of what they're trying to do is implement tightening in financial conditions. This is loosening, just so you guys know. I mean, this is where the 10% go, ooh, I feel a little richer here. I'm going to go ahead and, buy that $15,000 couch at Restoration Hardware or some shit like that. Anyway, so just remember, the markets going higher is not necessarily what the Fed wants. They want stability, but it rallying like this is not helping their cause. Dale, what are you thinking? Where are you gonna go here? I mean, you obviously think we're going into a bigger, wider conflict. So how do you want to trade this inflation and everything else?
Well, I thought that the Dixie might trade 104.70 or so, and then I don't think this was the high at 50% at the 107.20 level. Looking for one more push up towards 109, and you and I have been prepping our community for months on end to get ready for a 102 euro. I still think that's in the cards.
Yeah, and I want to trade that way too. I think if you look at where equity markets are at today, and I would probably have maybe a little bit different attitude if we were just consolidating down here. But given the fact that how aggressively we've rallied over the last couple of days in the face of everything that's happened.
Okay, everyone's saying that, Blake. What's the hallmark? What's the hallmark of a bear market rally?
The short squeezes that you see.
Yeah, what's the hallmark? Short, dramatic, and fast.
Oh,
so,
yeah.
Right? So,
Yep.
I mean, this still could be a relief rally. I won't give up the short side until we close, say, over 44.20 or so. We're at 61.8 back. We could even go 78.6, but I still think what we have done over the last couple months, I'm going to give it at least one more shot that we've been setting up a top. And to me, this rally is an opportunity to get short. You look at things like Amazon, and Apple's only rallied 38% back. So there are some reasons to believe that you can fade this rally.
We got about a minute, and don't forget there's big bank earnings on Friday. Big. I would let me see.
They look pretty good, the banks.
Hold on. We have just so you guys know, and let me get ready for today. So I'm gonna go grab the data flash here.
You would hope banks look better, Dale, with rates at 5%. If they can't make money in that environment.
Yeah. And rates, maybe the rates coming down has taken pressure off them too, Ryan. What do you think?
Yeah, potentially.
Financials.
I think they've got to go a bit to match last quarter's earnings, though.
Yeah. Okay. So
as far as bank earnings go, we have JP Morgan on Friday, Wells Fargo, BlackRock, Citigroup, PNC, First Republic, and probably a few others that I don't have on my list. This Friday. Okay. It's gonna be a big deal on Friday, guys. Big deal.
Right into the eclipse.
Right into the eclipse is exactly what I wasn't thinking, but that's okay. This is the dollar index. This is a 15-minute chart. So, do you want to look at the dollar yen, Ryan, or do you think we just look at the dollar index here?
No, that's fine. You love your Dixie. I
thought you were going to say you love your Dixie.
Yeah,
you almost said it, Ryan. You almost did. I thought I saw you. I heard you. All right. So listen, we got the data flash here. We do have some building permits out of Canada, but there's the producer prices. Yields off to the right, Joker's off to the left. Dollar index here on the left, S&P right in the middle. 6 seconds. Ryan, scream it out if you see it before me.
Yeah.
Ryan, you looking for 107 euro?
Wow, there goes the euro. Boom, dollar strong PPI 0.5%, 2.2 year over year. Woo, that's hot.
2.7 on the call. Wow.
Yeah, they're fading it.
I had to sell a little bit of euro here just to get ahead of that. I sold some at 92 just a moment ago. I think the dollar is we're gonna play into that and look at equities. Equities are starting to move a little lower too. And I'll say this, that with that data, people are probably looking at the CPI tomorrow going, how about what if, the CPI comes in a little hot? I think anybody who's short dollars is going to be thinking twice, and I don't want to have a lot of exposure, but I think this might give us a little bit of a head start. What do you think, Ryan? Yeah,
I said it on the Flow show. If we get a hot number, they're going to ramp up expectations for that CPI tomorrow. High revision as well. PPI got revised up to 2% last month from 1.6. And actually, food and energy is actually lower because the prior got revised up to revised down to 2.9. It's all a bit jumpy now.
Yeah, look at the just green across the board. I think it's going to give bulls something to think about. Equity market bulls, you can see here. Let's go back to this. Like Dale, you have people going, oh, wait a second. Wait, here we are stalling ahead of the 4,000 level. We got some hot data, giving people some pause, something to think about. So Dale, you have an interview this morning, right?
No.
Oh, okay.
Yeah, Andy rescheduled.
Oh,
I put it there early in the week on.
Sorry, I missed that. I missed that message. But hey, let me mention this, guys. Since you're here, we do a pricing. We do a pricing discount only a couple of times a year to join our community. This is our seasonal offer. It's going to go till October 20th. Buy 1 month, get 1 month free. A 30% discount on semi-annual, 40% discount on annual. These prices do not come up, and most of you know that if you've been listening here for 7 years now, Dale. Yeah. Everybody should know that we only do a discount a couple of times a year. So this is it. If you want to take advantage of being inside the ForexAnalytix community, this is the time to do it. And I'm not joking, because most of you know that once we take this off, you won't see it again for months and months and months. So take advantage of the offer so you can be inside of our chat rooms, inside of our community. Here's the trades room. Here's their general chat room, which I've got messages I have not responded to yet. But you can see what does Bosch mean, Ryan?
I don't know.
Bosch. It's like excitement.
What does Bosch mean? You just wrote Bosch.
You guys just make up words.
They do. I started watching.
They make up words over there.
I started watching this Beckham thing.
You made the whole language. Thank you very much.
Oh yeah, that's right.
I was watching the Beckham thing on Netflix because my wife wants to see Posh Spice and all the whole story, and I learned a lot of language things that I didn't know before. It's great. Anyway, but you can see all of our conversations, all of our different threads, and I've got a lot of messages that I haven't responded to this morning. But that's our we have the S&P room, we have the macroeconomics chat room, we have the news and research room where people are posting articles, headlines from Bloomberg, speakers, everything, and then the Spanish chat room. So you guys, if you want to be involved in one of the most active trading communities, get involved with ForexAnalytix, and this is your chance to do it on the cheap.
This way you won't be alone for Halloween.
Yeah, that's right. That's right.
But you have to do it 10 days
before
Halloween. Otherwise, you're unhedged into Halloween. You're on
there. You go. That's one way to think about it. Anyway,
okay.
Hey, let's go with some final thoughts here as we'll wrap things up, and we have the morning edge starting in about 40 minutes. And that's when we go through all the different instruments and get all these key levels developed, and we go through all that and more. So let's start. Ryan, what are you thinking here? What are you going to do with this PPI data? Is it changed your mind? What are you going to do?
No, it hasn't even given me much of a dollar rally to get my teeth stuck into. So, yeah, I think that's a reflection. Price action tells all. Yields have rallied, what, 4 pips?
Nothing.
Nothing. I think it will get expectations moving on the more bullish side for CPI tomorrow. But, the price action's saying it all at the moment. We poked our nose into 149 in dollar yen, and we're now trading 91s, 90s. So, that tells you everything. We're 5 minutes after the data, and dollar can't hold a bid.
Yeah, dollar is and it's struggled the last couple of days. I mean, let's not forget. I mean, the dollar has really struggled as yields have come off, but we're getting close to completing that double top. So it's like the dollar short story was last week's story. We talked about it on the week ahead video when we did we did the hammer on the weekly chart. Everybody should have seen that. Last week we had a hammer, talked about on the week ahead video. We should have seen some weakness. We got the weakness. Now we're in a very tricky spot with CPI coming out tomorrow. So should be interesting. How about the cable? What do you do with the cable here, Ryan?
Burn it to the ground.
Hey, you live in the UK, so obviously we got Bailey speaking. He's in Morocco this week.
Another holiday?
He's on another holiday. Him and Christine Lagarde. They're going to be nice and tan.
No, cable, 123, 23.10 is the level up here. We've got a bit of intermediate support, 122.60s. So, you might want to go with either direction on that one.
Okay. And I think this is, this is one of those situations where you're like, oh, look, we got a breakout here. And then you're like, okay, I didn't look far enough left and I've got really big support right there. So that's one of the things that you got to look at as you're making this little move in cable. Dale, what are you thinking going into today?
I'm looking to, I think Euro has 107 in it. I'm a seller up there looking for 102. After we get down to 102, I will not be talking about the short side of the Euro for a few years.
All right.
Same statement I made about gold when gold was 1810. Even though I think it could drop one more time, I'm not talking the short side. It's all accumulation. And once Euro's 102, I think you could accumulate the Aussie with it, and it's going to be time to be diversified out of the dollar. So that
timestamp that mofo, Dale. Timestamp it. Timestamp it, mate, so we can show people how right you were.
Okay, a lot of it's on videotape. So anyway,
he just said videotape. Dale, we don't use that anymore.
Oh,
it's in the cloud, mate. Clouds.
How about 8 tracks?
Floppy disk.
In the Casa de Vida, baby. Anyway, I feel in tune. So we'll see. Good show, guys. Trying to make really FX has been pretty tame, don't you think, with everything going on? Pretty tame.
It has. Oh, by the way, I should probably point this out. We have the dollar Swiss that has a little bit of a double top, but it's still got a little bit of work to do, but we're getting close.
That was a great call by you last Friday. You got short, or you're talking about getting short under the blue line.
I played the dollar to the short side quite a bit last week, but this week I'm kind of changing my tune here. So but it's tricky. It's not easy, right? This is not an easy. We're in a kind of a bit of an inflection point, and I don't feel that it's a slam dunk easy call at this moment. So those times when you're in the market a couple times a month where you're like, this is it. I'm doing it. You know, I'm
Yeah.
going, I'm long, I'm short, I've got
conviction.
conviction. Yeah, I don't have conviction here. And there's nothing wrong with that. And
No.
you know, some people will have
because you
great
will.
conviction when I don't, but you will. Yeah, you will.
You know you will. Just
Yeah.
don't feel agitated because you don't right now. You know, there are those times, just accept them and you'll see it. It'll be compelling enough you won't be able to stop yourself.
Right. Yeah.
man?
So
Wow. You know, I had that exact conversation on the flow show this morning.
Yeah. So
did you?
it's hard
You
to
know
judge.
what? I have a feeling I'm going to be having that same conversation on the trade-off a little bit later this evening too. So hey guys, I know we were without K-Man today. He's in Belgium. He'll be gone for until the weekend. But it was really nice hanging out with the two of you guys, and really nice having all of you listeners in with us today. We had a big group in here today. Tomorrow's going to be just as big, if not bigger, because we will have the CPI data. So make sure you're joining us then. Dale, since you don't have a guest today, I think you have one tomorrow. So I'll let you take it from here.
Yeah, in fact, it's Mish from Market Minute.
Yeah, Michelle Snyder. She's awesome.
Be here. Yeah,
she's
here.
awesome.
And so, guys, don't just count your pips, count your blessings. Take advantage of this. I have interviewed myself. I talk to myself all the time, Richard. Anyway, anyway, you know, I think that's going to be a historical fall with everything that's happening geo-wise. So, you know, with a crisis, there's opportunity. With the team that Blake has put together, I'm sure that people are going to be pointing out many of those going into the end of the year for you. So look forward to welcoming everyone to our community. Have a great one today. Thank you, Ryan, Blake. Always
cheers, mate.
Batting the ball around with you. So see everyone tomorrow. Good luck today.
Adios.